Well, good day, all. Ira Epstein, and here we are with your Spyder ETF stock market wrap-up. And this wrap-up is for the evening of Wednesday, the 5th of October, 2022. I want to thank all of you that registered for the webinar. We are booked out. So first time I'm telling you, we are totally booked out, overbooked. So I'm hoping that you rush in because it's first come, first serve. I'll open up the gates at 12:15 p.m. Central Time. If you have commodity questions, you can write them in there. You've really helped me out a lot by writing for the questions of stocks, spiders, and ETFs that you want me to cover. I've got 20 some odd, 30 charts that you've asked me to do. I've done those. It's going to be a real fun time. All right. Let's talk about where we're at because the markets are interesting. You know, you had a late day rally. They're saying there were some big option orders that were taking place that drove the market. I don't know if that's the case or not the case, nor do I care. What I care about is we're in a holding pattern. We are now in this pattern where for the next 2 mornings we get crucial data. The market is focused on jobs. Are you watching the Fed, governors, and the presidents come out and talk? One after the other, they are uniform. They're going to beat back inflation. They'll do whatever they have to do. They're not going to let that genie, once they get it under control, creep out. It may take longer than they think. Mary Daly was saying she thinks it'll be something we can get down maybe next year to 3% inflation. Okay, but I'm assuming she's talking core. If she's talking general, how do you do that without the core following? So core is going to be the stickiest of the whole group. That's why I mention it. And that's because of rent and other things. Now, as I keep reading about housing, they're saying for the first time, rents are in fact falling. And as you know, you've crushed the housing market. If you look today at the MBA numbers, and that is for the new mortgages, the refis, and so on, crushing it. They're just in a state of collapse. You're just shy of 7% in mortgages. People aren't doing anything just yet. All right, so you've effectively shut down the real estate market for the near term, but that doesn't mean prices are breaking because you don't have a supply constraint. Everything's 2 parts, demand and supply. Always remember that. All right, so let's go to some of the charts and get a feel for what is going on here. And I'm going to repeat. Tomorrow morning, unemployment claims. Friday morning, jobs data. Bloomberg started out Monday with 250,000 jobs. I think John Farrow was mentioning it. Today, he was up to 265,000. So the survey numbers coming in a little stronger. The last thing the Fed wants to see. The Fed wants to see those numbers under 200,000. They want to see that go down. They want to see the unemployment claims go up and the JOLTS ad collapse and people not being hired and people letting go to hurt the economy so that we capture inflation. Then they'll walk the tight wire. Then they'll pivot, won't raise rates much more. They'll become a little accommodative and nothing falls apart. It's hard, real hard, but that's the game. Yesterday I was saying I thought Goldman might try to fill this gap that you have in here. So we'll see. What it did do is it rallied to fill this gap. See that on the chart? Do you have to fill gaps? You don't have to, but a lot of chartists look at that. When I look at the overall market, you have a pattern of a lower low and a higher high. Where's the battleground? If you're a student of mine here in these videos, you know that I'm always looking at where the line in the sand is, the big red line. It's the 18-day moving average of closes. Then I'll look to see are there other moving averages with it. Most of the time they're not, but in this case you got 2 of them together, the 100 in that number. You had a bearish crossover a couple of days ago and you didn't make a new low. So far for the bearish crossover people, they still have open objectives that are down here. What about if the market clears these numbers? Well, then you've got your next layers of resistance at the 50-day moving average of closes, 329.75 to 331.54. But so far, this is a bear market rally. Why? Because all you've got is a market that left its downtrend and rallied up to the 18-day average, and it's still under it. And you don't have higher highs and higher lows. What about in this chart? There's the Bollinger Bands. Well, you were under them for how many sessions? 3 or 4. And you move to the right-hand side. You rarely go beyond 5. So if your friend says, I want to place a bet with you, you're going to hit 6 under. Bet with them. It's what casinos are made out of. There is a chance you'll lose. There is no such thing as a 100% bet. The odds are going to be 99% with you. I want a guy to sit at a table all day long betting if the odds are 99% with me. He can hit a streak and beat me. If he plays long enough, I'm going to get his money. That's how Vegas is built. When you take a look at where we're at with momentum, you lost the momentum to the downside. You had an embedded reading. Do you know what embedded is? Do you know what these Bollinger Bands do? Well, when that occurred, what the market said, because you have an edge with it, is if that's lost, you're going to the 18-day average. Unfortunately, it all happened in the same day. Most times you get a big lead. Doesn't work that way all the time. Most times you do get a big lead. When you come to Netflix, it's in the middle of nothing. Trying to trade this, as I told you, when you got into this pattern, this is where traders lose fortunes because they're trying to make something out of nothing because these bands, which are like in a street, big cement barriers, they're saying, I'm not going much over that and I'm not going much under that. Let the other guy crash the barrier with his huge semi and move it out of the way. You don't play for that to be done. In Apple, by the way, I'm waiting. I'm hoping to get my phone this week. The market's under the Bollinger Band, spins off here, but I'm looking for major resistance on this market now at the 150, 139, the 150, 66. But it's not a short sale there. Why? Because the pattern now is higher lows and a higher high. That's an uptrend. Even though the bias is down, which negates the two, it takes away the selling opportunity as far as I'm concerned. Disney, you lost the embedded reading. So this one is live. Doesn't mean I'll be right in my analysis, but what I am looking for is if you lose the embedded reading, which you did here on Tuesday, I am now looking for a challenge of the 18-day average of closes. Hasn't done it. Something else has happened in both this and Apple. In both of them, you're getting bearish crossovers. The 18 got under the 100-day. And 18 under the 100. So I keep my eye on that. That is not a bullish setup. That's a bearish setup. But the momentum is up, and momentum will win the day at first. That's what I'd expect to occur. In XLF, again, when you lost the embedded reading, you move to the 18-day average of closes. It's an edge if you're a trader. I am not, by nature, a day trader. I'm a day trader when I'm wrong. But any other trades I'm putting out, I don't know if they're going to be good for a day, 5 days, a week. I never know. All right, nor does anybody else. Okay, it's wonderful if you think that's the case. It doesn't work that way. However, what I do know, and what I absolutely will bet on time and time again, is when you lose an embedded reading, that momentum moves before price. You lost it, and it is, and you went to the 18-day average of closes afterwards. XLI, the same darn thing. Do I have to prove this on each one? I'm not. This will be the last one I do it on. But just to show you, you lose it and you went right there. And where did you stall? You stalled at it. You've used your momentum of that. That doesn't mean you can't go higher. You've used up all that momentum. Now you're in an oversold condition. Oversold conditions are alleviated by, first, generally a rally, or going sideways to get rid of it. That's how the math works on the slow stochastic, or re-embedding. Well, it's not going to re-embed right away. XSD, coming alive, outside data to the upside. So until today's low is taken out, the odds are very strong that the semiconductors are going to make a run at least to the 100-day average. You're not overbought, so the window is open if the Bollinger Band can be hit. Both are open there, and it's right now in the bull camp. In the home builders, I admit to a surprise because everything I'm reading is terrible. Yet, this has come alive with the markets too. But that's why I am not a fundamental trader. I avoid it. I don't want to get caught in your problem. Your problem is you always have an opinion. My problem is I don't give a darn. Take the name off the chart. I don't want to know what it is. I want to see the pattern. I want to know what each swing is worth. It's a stock. It's going to be worth a penny or $1. I know exactly what I'm dealing with, and away I go. I'll trade the pattern. I prefer you remove the name. That's in my full charting course. That is how I teach charting. You will see me take the complete name off the charts. You don't know what it is. I want you to not have an opinion. I want you to trade the pattern, because what you're going to do is you're going to say, oh, I like the home stocks. Well, it means you're buying it. Is it the right thing to do? I don't like the home stocks. Well, maybe you miss out on buying opportunities. I don't want to be in that camp. There was no setup here for me. Energy, I decided not to trade in front of what I called a major report. Now you're overbought in an uptrend. I think there's a floor in the energy sector now. Why? Because OPEC put one there. So that's what they've done. Now, does that mean if the recession gets terrible that works? Not necessarily. But we're not in a recession that's terrible. I think we're in a recession, and the question is, where do jobs go with it? If the jobs were to fall off the cliff, in other words, they all disappear, yes, then things get terrible. That's not going to happen. In GLD, you're caught in a broad range. You're caught in the lower band, and maybe you can get to the upper band. You're already overbought in the market. The easy money never was there. This market, just throw a dart at it. You decided that, whoa, that was the low and it took off. That's not trading. That's what I call, guys, unfortunately, I see it all the time. Oh, I'm just going to buy it and hold it. And of course, you could have bought it and hold it all the way down here too, right? Did you have the guts to stick with it? You know you don't. So I know what you do. When you look at GDX, went from the lower band to the upper band. Expect that. This is a vertical price rise, not a trend. Copper, I am expecting better things, all because on the 16th, the People's Party Congress opens up in China. And President Xi has two elements that he really has to solve for his economy. How's he going to handle COVID going forward? And what's he going to do about the property market? Those are them. Well, property is going to rely on building. Got to finish all these unbuilt buildings that people refuse to pay mortgages on anymore. The difference there, you buy a new building, into a new building concept in China, you pay a mortgage on the day you sign the papers. It's not built. It might be built. It's not finished. It might be finished. Doesn't matter. It could be a concept. You're paying your mortgage. Well, the people had enough of it. After 6 months, a year, 2 years, they're going, there's nothing happening. I'm paying a mortgage every single month. It's my life savings, and there's nothing happening. To make that happen, you got to do something. So China's got to throw money at that sector. Big money. Big money. Billions upon billions upon billions of big money at that market. And in order to do that and get them going, this baby has got to come alive, because you're going to need wiring, infrastructure, everything to get that done. That's my concept, at least. On TLT, well, who wants to own anything in this with these two jobs data coming? The unemployment claims and then the jobs report. You own it. I want no part of that. UUP, dollar index, fell down to support. So you stayed over the Bollinger Band. You lost your embedded reading. Kaboom. And this is the ideal case. It lost it early on when the market was here. Your edge is before you get back over that high, you're probably going down to that number. Big edge if you're trading that. FXE never did embed. It was a downtrend under the band, came back, and it stalled out against the 18-day average of closes. So you put it all together and you work with game plans. And by the way, I'm one happy camper. Look at Twitter. I told you I'd throw away money. And today I got out of 2/3 of the position. I made sure I got something through the past 48 hours. And we'll see. I might want to get rid of it all, because why play for the last $2? My goal was $50. I told you that in tape upon tape upon tape. And it was throwaway money. It had nothing to do with trend trading. I just believed legally that Mr. Musk had no leg to stand on. And knowing he doesn't want everybody dragged through the courts, you settle. I saw this in LVMH and Tiffany, and that's what I figured was going to happen, and I got lucky. Carl Icahn did a much better job. I understand he nailed that. In any case, I'm Ira Epstein. Watch this video on Bollinger Bands. Learn a little bit. For those of you that listened and signed up, I will see you tomorrow at 12:15 in the morning, 12:15 p.m. Central Time, rather. I'll open up the chat room, And then in the webinar, I'll begin it all. Come at 12:30, right on the head. It's only 20 minutes long. I'll see you there. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.